Hi guys, and welcome to the weekly roundup for week commencing the 24th of September through to the 28th of September. So, summary for last week. I'm going to give a very general overall statement, and that is that it's a very normalised market. There are a couple of exceptions, I'll come to that in a moment. Why do I say it's normalised? Because I'm seeing some very nicely defined trends, and our strategies are delivering trades as I would expect them to. So we always look for a trend, whether it be north or south, long or short. We don't care, but we do like the trend. Okay, remember, trend is your friend. It's a very overused statement in trading, but it's true. Yeah, trade with those trends and maximise them. You'll never get the turns, but you can maximise the opportunities within those trends. So it's a very normalised situation. We've had a very good result for September. Last week we were 1% up, giving us a total of 3.5% for the month of September, putting us on just over 40%, nearly 40.5% for the year-to-date end of September, which puts us well on target to exceed our 50% expectation of our performance this year. So maximise that, take the opportunities, use this period to really put some cream on the top of the hard work you've done this year. Because September, October, November are traditionally very profitable months for us, leading up to closing off our book at the end of probably the first week of December. So really maximise that. Now, I said there were two exceptions to the normalisation last week, and that is the Euro and GBP. I'm definitely seeing some Brexit jitters, and of course last week was Labour Party conference, and we've got the Conservative Party conference coming up this week. You never know what they're going to say, and I'm going to share with you an example of that when Jeremy Corbyn made a few comments last week, which definitely affected the pound. You don't know what he's going to say, you don't know when he's going to say it, stay out of the market. Those are my rules, and I'm going to share in Learn and Trade with you shortly in the new format that we're going to adopt on a weekly basis for this roundup. So stay safe this week. It's a very normal week, normal conditions. It's a good time of year to be trading. Everybody's back into the swing of things properly. Word of caution, it is non-farm payroll this week, so make sure you're checking your red flag news. Make sure that you're not trading 30 minutes before, 30 minutes after that in the relevant pairs, and you're adjusting your trades if you're in a trade leading up to that news. So if you're in profit, de-risk it. If you're in a loss already, then just sit with the situation. So be calm this week. I always find the first week of the month can be a little slow getting going, and that can definitely be down to non-farm payroll. We don't trade on Fridays around non-farm payroll, okay? But the whole day, okay? Just stay out of the market. I think that it's too many people waiting to see. It's the biggest impact news of the month, and that's my advice. Stay out on Friday and watch your trades leading up to it, because there will be lower liquidity, lower volatility leading up to that day as well. So that's what I want to say about this week. I'm going to share two things with you now, two trades that we took last week. I'm going to share with you a winning trade on US dollar Japanese yen, and I'm going to share with you a losing trade. And actually I don't call them losing trades, I call them learning trades, and I'm going to talk you through what I feel happened, why we should have stayed out of the market, and something that we'll be putting in place as we move forward. So let's move into the trade of the week, our winning trade, US dollar Japanese yen. Okay, and I'm going to share with you our winning trade from the week. This is a dollar yen on a daily time frame. We spend probably 10 minutes a day analysing these charts using some exponential moving averages to give us the indicator to move into the trade. This trade, as I say, dollar yen on a daily time frame, and this was our entry candle here. So we wait for the end of the day, candle to close, and we're looking for these three exponential moving averages to cross that specific candle. Once it has done,
we'll set two orders, an order long and an order short, because quite frankly we don't care which way it triggers, we just know it's going to trigger one way, and because it's a daily candle, it gives us enough scope that if it moves in a northerly direction upwards, then we know we're in a long position, we'll cancel the opposing order. The same if it triggers short, we'll cancel our long position. So specifically on this chart, there's the candle with the three exponential moving averages, and we got triggered just on day 2 after, with a profit target up here. Now this orange line is our 2% profit target. Now you normally hear me talking about the 3R, 3-to-1 risk reward ratio. This is one strategy where we aim to take 2% profit out of the market. So there's our entry. We got triggered here. Actually, we got triggered here. So day 3 of the trade. And then of course we move through our risk management, 0.5% here, 1% here. At 1% we will have de-risked it, so it becomes a free trade, and then it moved up to our 2%. So time frame for the trade: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. 18 days it took us to make profit on that trade. That's quite a long time. Slightly more than the average for this strategy, but we're prepared to wait 18 days to take 2% out of that market. So there's a winning trade. I want to share that with you, and you can see, you can pick the bones out of that strategy and see how we do that as well. That's something that gives us something in the region of a trade a week, which adds very nicely to our trade percentage, our overall portfolio profit.
So US dollar Japanese yen was a winning trade for us. We made 2% on our 1% risk, exactly our profit target for that specific strategy. Now I'm going to share with you the lesson of the week, in other words our losing trade and what we took out of it and what we're going to do better moving forward. So over to our dollar yen trade. Okay, so welcome to our winning trade that I want to share with you from last week, which is a pound USD trade on an M30 time frame, so every candle representing 30-minute time period. So pound USD M30, and you can see we've got a very nicely defined trend. It's moving upwards, and here with this green arrow we had a buy signal. Okay, so this was signaling a buy signal for us. So we put in a buy order, and we got triggered on the next candle. So you can see we got triggered here. So it's our signal, this is our entry, and you can see we moved up slightly, and then it started moving against us. Eventually stopping us out on this candle here, I don't know how long that is, but probably 3 or 4 hours, 30 minutes, so probably 6, maybe even 8 hours after we entered the trade. Now, what I noticed was it was right in the middle of the Labour Party conference, and this dip here started to happen just as Jeremy Corbyn started to tell people that they were going to vote against the Chequers bill, the Conservatives, if Theresa May tried to push it through. And I really felt that had a very negative effect on the market, and it pushed it back down, only stopped us out slightly, and then moved back up again. So the lesson for the week is just really make sure of, if it's not an economic data that's being released, be aware of some of the fundamentals that are happening in the background. And a Conservative Party or a Labour Party conference right in the middle of Brexit negotiations was definitely a schoolboy error from our point of view. So the learning for us, don't trade during those periods, okay? There was no red flag news, but there was this conference going on in the background, which I think had a very negative effect on the markets and took us out of our position. So moving forward, we will not trade during periods of party conferences, certainly in the UK, and applicable throughout the whole of Europe and the US as well. So we're going to be monitoring that as we move forward. So that's our losing trade, our learning trade, and I'm going to share one of those with you on a weekly basis to make sure that you take those lessons home with you as well to improve your trading. So I hope you guys have taken something away from that. It's very important that we all learn from our losing trades, okay? And then they become winning trades because it's going to improve your trading moving forward. So I'm going to share with you every week a winning trade and a learning trade, and hopefully you'll be picking some tips out of that as we move forward. So the big watch for the week, non-farm payroll on Friday. Make sure you don't get caught out by what I consider the most volatile timing of economic news. So it can influence the market, it can be a real whipsaw situation. I don't try and trade it, I stay out of the markets by Friday and look forward to recommencing the following Monday. Thanks for checking in, guys. I hope you've enjoyed this video and you've got something out of it. Make sure you implement the learnings that we're having so that you can improve your trading too. If you took anything away from this, please share your insights in the comments below. Click on our social media, give us a like on Facebook and Instagram, and make sure you subscribe to our YouTube channel for more lessons from our weekly roundup. Thanks for watching, guys.